Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX. With today's European session outlook, we'll start with the North American markets. The dollar trimmed early gains against the yen and the euro Wednesday, but remained higher against both, even as falling Treasury yields dulled the dollar's luster. Several factors weighed on Treasury yields in afternoon trading. Stronger than expected demand at an auction of 10-year notes and a sell-off in U.S. stocks instigated by declining Apple Inc. shares and a sell-off in crude oil. Treasury yields move inversely to prices. The dollar's afternoon declines also reflected the expectation harbored by some investors that the Fed policymakers will decline to raise the central bank's benchmark interest rate at its meeting next week, which is on Thursday. The interest rate decision in Canada was yesterday. There was no change, remained at 0.5%. The statement said inflation has evolved in line with the outlook in the bank's July report. Total CPI inflation remains near the bottom of the target range, reflecting year-over-year price declines for consumer energy products. We had also housing starts year-on-year in Canada, 26.9 thousand, better than expected, and in US 10-year note auction, 0.12% higher than previous. Job openings rose to a record 5.75 million in July from 5.32 million in June. And today we have the initial and continuing jobless claims, as well as import-export price index month-on-month and year-on-year from the US. In Europe, the German 10-year bond auction was 0.69% and 0.61% previous, and we had the French non-farm payrolls, as expected, at 0.2%. So we had some statements from EU leaders. The German Chancellor Angela Merkel said on Wednesday that the Eurozone economy was in better shape than a year ago, and said reform efforts by countries like Spain and Ireland had paid off. European Commission President Jean-Claude Juncker said on Wednesday that the Eurozone needed a common system of guaranteeing bank deposits as well as its own treasury, working with the single currency zone's existing bailout agency. The DAX 30 had a big movement, 340 points down, CAC 40, 60 points down. We're not going to have any major events for today from Europe. In the UK, the FTSE 100 jumped 1.4% to close at 6,229, nabbing its third consecutive win. The pound was down 0.2% to 1.5361, following downbeat UK factory figures for July. UK manufacturing output dipped 0.8% for the month as exports fell. Output also marked its first yearly fall in nearly 2 years. The data came ahead of the Bank of England's monetary policy decision and release of minutes today. Market observers expect the central bank to leave its benchmark interest rate at 0.5%. All right, on to the Asian and Pacific markets. China's finance ministry on Wednesday said the country will unveil more forceful fiscal policy measures to stimulate economic growth. Fears that China's economy is cooling at a faster pace than anticipated has spurred a run of equity sell-offs worldwide. Meanwhile, Japan's Prime Minister Shinzo Abe said his government plans to go through with reducing the corporate tax rate by at least 3.3 percentage points over 2 years. In New Zealand, we also had interest rate decision, 2.75%. It's down from 3%. The statement said that domestically the economy is adjusting to the sharp decline in export prices and the consequent fall in the exchange rate. The economy is now growing at an annual rate of around 2%. Several factors continue to support growth, including tourism, strong net immigration, the large pipeline of construction activity in Auckland, and importantly, the lower interest rates and the depreciation of the New Zealand dollar. While the lower exchange rate supports the export and import competing sectors, further depreciation is appropriate, given the sharpness of the decline in New Zealand's export commodity prices. The New Zealand dollar versus the Japanese yen was 130 pips, down 260 range. In Australia, we had the participation rate come out at 65%, down only 0.1%. The unemployment rate was at 6.2%, down from 6.3%. Unemployment changes, 17.4 thousand, up from expected 5,000. We had the full-time employment, 11.5 thousand, down from 13.1 thousand. And part-time employment, 5.9 thousand, down from 26.1 thousand. In commodities, gold futures fell sharply yesterday, suffering its largest one-day fall in more than 6 weeks. The American Petroleum Institute said crude stocks last week jumped 2.1 million barrels, far above the 300,000 barrels build expected. With refined product estimates not immediately available, today the U.S. Department of Energy will release more closely watched figures on the same data. Natural gas storage change is also due today. The U.S. Energy Information Administration's next storage report is expected to show a build of approximately 80 billion British thermal units for the week ending September 4th. Gold had a range of $24 at 1106 now. Silver had a range of 36 cents at 14.65 now. Crude had $2.20 range at 43.89 now. Natural gas is trading at 265 at the moment with a range of 6 cents. All right, everybody, thank you for the attention. This was today's European Session Outlook. I'll see you next time. Goodbye.